Well, thank you very much to all of our speakers for joining us on stage for that special photograph. We're going to be moving on to our next session of the day now. It's particularly exciting because we're going to be announcing the launch of something completely new for Dubai's property market. I'm delighted to be welcoming the Dubai Land Department and JLL, who will be presenting the launch of the Commercial Property Index. Now, they will be delving into the city-level Commercial Property Index, the city-level Office Index, and the city-level Retail Index. I'm delighted to welcome to the stage Latifa Ibrahim, a Senior Director for Research and Data Department at Dubai Land Department. And she'll also be joined by Thierry Delvaux, the CEO of the Middle East, Africa and Turkey at JLL, as well as Mahmoud Ahmed Farghally from Research and Studies Specialist at Dubai Land Department, as well as Khawar, the Head of Research for the Middle East and Africa at JLL. And there'll be time for some audience questions at the end.
Good afternoon, ladies and gentlemen. Very glad to be here today. Real estate has always been the largest asset class in the world and is a prominent component to any investment strategies. Dubai is a top FDI destination and as such has led to greater scrutiny of data from investors. The number one factor that any investor will look at when considering a new market is transparency. Dubai and the UAE are very much aware of that, and making Dubai a more transparent market has been a top priority on the agenda of the government. JLL has been publishing for many years a report called GRETI. GRETI stands for Global Real Estate Transparency Index. And the last version of it showed that Dubai has rapidly climbed up the ranking from a transparency standpoint. GRETI also shows that highly transparent markets are the preferred destinations for investors. In fact, highly transparent markets account for 75% of the global investment volumes. 1 year ago at Cityscape, we had the honor from the Dubai Land Department, which signed with JLL a partnership to create a property index. Today, it gives me great pleasure to announce the launch of the CPPI. Remember that word, CPPI, the Dubai Commercial Property Price Index. It is not only a commercial property price index, it's also an office property price index and a retail property price index. It'll be published in Arabic and English, updated on a quarterly basis. But let me explain, very briefly, what is a property index actually? A property index is an investment performance index. It shows the investment returns in a certain investment period. But it's also a very good indicator for developers. It will help developers decide, is it the right time to start or should I not start a new project? The CPPI will be the barometer of the real estate, the commercial real estate market in Dubai. As you have all noticed, especially during the pandemic, Dubai has worked very, very hard to boost its economy, increase the FDI volume, and it is really my great pleasure to contribute to that strategy with the launch of this index. Thank you very much. Appreciate it. And now, there's been a little bit of change of who's coming. Yes, let me introduce Mahmoud Farghally from the Dubai Land Department, who will give us a snapshot of the current real estate market. Thank you.
Thank you so much, Thierry. Ladies and gentlemen, Your Excellencies, thank you so much. Thank you all for being here today. I know you are all excited about the first of its kind CPPI, the Commercial Property Price Index for the Emirate of Dubai. So I will not take much time from Khawar to represent the index. I will just, in a few minutes, in just a few slides, I will take you through a glimpse about how the real estate market revived a challenging year, which is 2020, and overcome the numbers in 2020 and 2019 and even 2018. Just a matter of fact, so key figures about the real estate market in Dubai. We have over 210 nationalities from around the world, from around the globe, investing already in the real estate market in Dubai. They are working in various areas in Dubai. We have over 7,000 real estate brokers working in more than 1,400 brokerage offices. All of this combined with a number of projects, we have over 913 finished projects in the real estate sector up to 2021. We have over 364 projects still under construction, have been developed by more than 128 active developers in Dubai. Now I will take you through the in yearly basis, we can see that, however, 2021 was a challenging, 2020 was a challenging year, but 2021 actually was a very good year for the real estate sector in Dubai. The first 9 months only of 2021 overcome the whole year of 2020. Some will say, yes, of course, it should overcome 2020 because 2020 already was a challenging year, but not only 2020, 2021 overcome the whole year of 2019 and 2018 as well. With the total number of transactions in 2020 exceeded, in only the 9 months, exceeded 64,000 transactions, and a value exceeded more than 242 billion dirhams. In quarterly basis as well, we can see that the quarters of 2021 had actually a remarkable growth in terms of number of transactions. And as we will see in the next slides also, investments, we have over 176% growth in number of transactions in Q2 only 2021 compared to 2020, and 69% compared to 2019. In terms of value as well, Q3 2021, it witnessed a growth of 28.7% compared to 2020, Q3 of course 2020, while Q2 2021 witnessed an increase of 208% compared to 2020. If we dive a little bit deeper by transaction type, which is sales and mortgages, we can see that the growth in the overall transactions was a result of a balanced growth in both sales and mortgages transactions. In terms of sales transactions, we can easily see that we have over 15,000 transactions, sales transactions in Q3 2021, and this is the highest number of transactions in a single month since Q4 2013. These numbers are really represented for how the real estate market overcomes the V-shaped, which started from the from first quarter 2020 and reached the lowest in Q2 2020 and overcome the numbers, even 2019 numbers, throughout the year of the end of the year in 2020 and the three quarters in 2021. All of these numbers also in terms of sales values, there is a growth in the values of sales transactions. In 2021, all the quarters have witnessed a growth. We can see in 2021 Q3, as the numbers are shown here, we can see a growth in the value of transactions. This growth exceeded 173% in some quarters. In terms of mortgages as well, as His Excellency Sultan Boti bin Mijran mentioned in his opening speech today, the mortgage transactions in Q1 2021 registered the highest number in the history of Dubai Land Department ever registered in a single quarter. These numbers, these growth in the real estate transactions and real estate mortgages and sales represents how the market in 2021 revived and overcome the numbers in 2020, and as I mentioned, they exceeded even the numbers in 2019 and 2018. As a market fact, or as a facts about transactions in 2021, the data shows that 63% of the transactions in 2021 was for units, and this is compared to a 24% for villas and the rest for lands, buildings, and other category. 73% of the transactions in 2021 in the secondary market, and this is left 27% in the off-plan market, and 61.9% of the transactions in 2021 in the residential sector, and the rest for commercial and other sector. If we looked at the investments, the real estate investments, in yearly basis up to September 2021, we have more than 54.7 thousand investment done by more than 34,000 investors in Dubai. This is worth more than 111 billion dirham in the first 9 months only of 2021. These numbers in 2021, as we can see, if we transformed them or if we translated them into a growth rate, we can easily see that number of transactions in 2021, the 9 months only, compared to the whole year of 2020, witnessed a growth of 154% in terms of value and 133% in terms of number of transactions. And also the real estate investments in 2021, 63% of the overall investments was in the secondary market compared to 37% in the off-plan market. And units had the biggest share of the real estate investments. We have over 68% of these investments for units, and the rest for villas, and 21% for villas, and the rest for buildings and lands and other types. Most of the investments in 2021, they was for in the freehold areas. Of course, the freehold areas where anyone can invest anywhere. These numbers of the investments, this growth in the real estate transactions was not by chance or not something randomly. It was something coming from a set of initiatives, set of incentives introduced by Dubai government and introduced by the Dubai Land Department. You have indicated more than 7 factors. We call them like a success factor that led to this growth in 2021. Of course, at the top of these incentives, at the top of these factors, was the digital transformation led by DLD, where now any investor anywhere around the world can perform any transaction from his house. He don't need to visit any kind of centers. He don't need to upload any kind of document. He can simply register his account or log into his account through Dubai REST application and perform whatever transaction he would like to do. In addition to this digital transformation, of course, the government incentives, the government stimulus packages introduced by Dubai government, which amounted for more than 7.1 billion dirham in 2020 and the last 2 quarters of 2020. These stimulus packages was aimed to enhance and to promote and to help businesses and business activities in Dubai. Adding to this, the incentives related to the visas, well, like the investor visa, the long-term visas, the 5 years multi-entry visit visa, in addition to the real estate investor visa, where you can obtain a real estate investor visa just to go to one place, just to go to Cube at Dubai Land Department at the 3rd floor, where you can just go directly using your property and obtain an investor visa in one place. No need to visit anywhere else, just one place, and then you will get your visa. Adding to all of this, the attractive prices, the attractive property prices, the high return of investments for the real estate in Dubai, the high rental yields as well. All of these factors helped together reviving from a challenging year and even overcome the numbers that was before, and now we are not back to normal. Actually, we exceeded the normal in 2021. This was pushed by these factors I have mentioned. All of this led to an outstanding performance for 2021. The Dubai real estate sector, actually, we have a clear vision to provide the market with more transparency, we provide the investors with more tools where they can take rational decisions about their investments. And one of these tools, of course, what we are going to witness today is the launching of the first commercial property price index with partnership with JLL company. I will not take a lot of time now. I know Khawar is so excited to dive in the index. Please, Khawar, the stage is yours. I'm done. Thank you so much.
Ladies and gentlemen, good afternoon. Mahmoud's right, I am very excited to be here with all of you today to launch the commercial property price indices. We've been working with our partners, the Dubai Land Department, on this initiative over the past year, which we hope will serve to further improve the transparency of the commercial real estate sector here in Dubai. It's worth mentioning at the outset, we've produced a report on the indices, and that's available to download on the DLD's website as well as our own JLL MENA. In today's presentation, I'll talk about what the indices are representative of. I'll talk about historic trends. I'll talk about various important economic events which have influenced price movements. And I'll also look at the macroeconomic outlook and, dare I say, talk about future price movements over the next 12 to 24 months. Now, I'll begin by covering the Dubai Commercial Property Price Index. Now, sorry, I've gone back. I need to, yeah, there we go. As the name suggests, all three indices, I'll provide an overview quickly, actually. As the name suggests, all three indices track sales prices. The first covers Dubai commercial property sector as a whole. The second focuses on office alone, and the third focuses on retail prices. Now, the valuers among you may be familiar with the term hedonic pricing, which was the methodology applied to create these indices. In a nutshell, this approach is based on the principle that investors value the characteristics of commercial property or its utility. Thus, prices will be reflective of the value of a set of characteristics important to investors. Now that the theory is out of the way, what does the commercial property price index take into account? Well, it looks at all property price transactions in the commercial sector, including, for example, office, retail, industrial, hotels, hotel apartments, effectively everything with the exception of the residential sector. In the case of the office price index, it looks specifically at offices, and retail, as I mentioned, looks specifically at retail price performance. So let's begin with the Dubai Commercial Property Price Index. How has it been performing historically? Well, after the 2008-2009 financial crisis, we saw prices reach their trough around 2012. In 2013, we started to see a pickup. And for those of you who were here in Dubai in 2013, I'm sure you'll remember that there was a lot of optimism about Dubai winning its bid to host the Expo, and that was borne out in 2013. That led to a jump in investor confidence and sentiment, and that was reflected in the transaction volumes, which I'll show on the next slide. The index hit its peak around 2016, which is around the point when we saw oil prices fall quite sharply. Over 2016, 2019, generally speaking, Dubai economic growth was fairly anemic, and that was influenced by other factors too, global events, such as, for example, the US-China trade war. In 2020, of course, the pandemic hit. However, we are now starting to see a flattening in the curve. In Q3 2021, the index on a quarterly basis was unchanged. Now, I think it's worth looking at this timeline in context of transaction volumes and values. We can see historically, values and volumes have tended to move in line with one another. and that was particularly evident at the beginning of last decade as well as towards the end. And it's also worth noting that over 2016, 2017, although value stayed more or less stable, volumes rose quite strongly. In other words, we started to see some level of discounted pricing. And that was reflected in the index shown on the previous slide, where the index turned down, and we can see that transaction volumes and values have since been moving in a downward direction in the similar way to the index. It's also worth noting that the bar furthest to the right actually shows transactions for Q1, Q3 total. So it's only for the first 9 months of this year, and already it's surpassed the outturn for 2020, which is perhaps not unsurprising, but it's more or less in level with 2019. Once we get the Q4 figure, we wouldn't be surprised if it's the best outturn in the last 3 years. Now, the rise in investment volumes is reflective of improving investor sentiment, which is in line with improving economic fundamentals. This is Purchasing Managers Index, which effectively tracks the performance of the non-oil economy here in Dubai. We can see actually it fell quite sharply at the beginning of last year and dipped slightly at the end of last year, but in September 2021, it grew for 10 consecutive months, which suggests growth in the non-oil economy. Furthermore, the outlook for the economy is bright. According to forecasts from Oxford Economics, GDP growth is expected to be in the realm of around 3 to 3.5% this year and next. And a breakdown of that figure shows that GDP will grow by around, non-oil GDP specifically, will grow by around 4% year on year in 2021, 2022. And that's predicated on a number of factors. First, the Expo 2020 event is expected to help provide an uplift to the tourism sector, which will benefit the hotel sector, which is one of the components in the Dubai Commercial Property Price Index. Furthermore, the government has introduced various measures, including supply-side reforms, such as 100% foreign ownership of onshore companies, lower cost of establishing business, as well as visa and citizenship reforms. Other initiatives include Operation 300 billion, which is there to help the development of the industrial sector. The aim is to improve gross value added from around 130 billion dirhams currently to around 300 billion by 2031. Moreover, Dubai's non-oil economy is closely integrated with the rest of the world and stands to benefit as the global economy starts to rebound. These are all positive signals for the global economy, and investors, including those who look at commercial real estate, tend to keep a close eye on it. As I showed earlier, this is starting to translate into a pickup in transaction volumes. So now let's take a look at the Dubai Office Property Price Index. Now, at the outset, it's worth highlighting that the vast majority of historic transactions recorded for this sector comprise Grade B or Grade C offices. So that's largely the segment of the market that we're talking about here. Now, much like the Commercial Property Price Index, it's been trending up. It was trending up in the first half of the last decade. And for some of the reasons that I mentioned earlier, in 2016, prices started to fall. Economic headwinds hit office investment activity as weaker business activity led to an increase in vacancy rates. And that helped, unfortunately, to erode the attractiveness of the office sector in the eyes of investors. Now, whilst transaction volumes have been on a downward path, as with the commercial property transactions, which I showed earlier, they are starting to bounce back for offices too. We can see in the first 3 quarters of this year, transaction volumes were higher than in 2020 overall, and we wouldn't be surprised if once the Q4 figure is factored in, it's the best performance in the last 3 years. Now, in line with improving economic fundamentals, it's perhaps unsurprising that the labor market is expected to bounce back. Employment growth is expected to be in the region of between 4.5% to 5% over 2022-2023. This is likely to translate into stronger take-up of office space and should help to apply downward pressure on vacancy rates. And we should see an improvement in investor appetite for this asset class. And we're already starting to see a bit of this, as demonstrated by transaction volumes as they're bouncing back. It's also worth highlighting that there is a short lag between values and volumes. Thus, as we look forward and macroeconomic fundamentals continue to improve, we should start to see a recovery in values, or at least some level of flattening. So looking at the retail property price index, we can see that in line with the commercial property price index overall and the office property price index, it trended up in the first half of the last decade, but unlike the other 2 indices, it stayed at that level until around 2018, after which it's been trending down. Now, it's important to highlight at this stage that the vast majority of transactions here are for support retail, so non-mall retail. And that's not really surprising given the fact that malls don't often change hands. Now, it's important to note also that the pandemic hit the retail sector particularly hard. We saw restrictions on movement for both the local population as well as international travel. The resultant impact of the pandemic has therefore been quite challenging for the retail sector, and that's been reflected in the price movement in recent history. Now, the bar furthest to the right is reflective of just the first half transaction volumes, and it's notable that just in the first half, the outturn was higher than the outturn for 2020 as a whole, and more or less in line with the results for 2018-2019. So we wouldn't be surprised that once we have the H2 figure, that the outturn for 2021 as a whole outperforms or is amongst the best since the middle part of the last decade. Now, Google produces a community mobility report which shows changes in visits to different types of areas such as grocery stores, parks, and it provides that data by location. The tech firm also provides that data for the retail and recreation areas, and we can see that mobility in April 2020, when the lockdown was at its strictest, fell quite sharply. It was around 79% below the baseline, and it stayed below that level, below the baseline, until October of this year, when it increased by about 5%. And that's no surprise, given the fact the Expo 2020 was launched in October 2021. Now we can see consumer spending and retail sales tend to move in line with one another, and we've seen that historically. Projections from Oxford Economics show that consumer spending and retail sales in Dubai is expected to grow by around 2.5% to 4% over 2021-2023. And that's expected to be helped by a strong rebound in the tourism sector, albeit let's keep in mind that the tourism sector in the UAE is bouncing back from a relatively low base last year. Nonetheless, the high levels of footfall and consumer spending is expected to provide the index with a pause for breath over 2021, 2023. So what are some of the key takeaways? Well, the Dubai Commercial Property Price Index is stabilizing. The office and retail property prices continue on the downward path. However, we are seeing a bounce back in transaction volumes, which signals a shift in investment sentiment. That, combined with the fact that the global economy, as well as the local economy, is expected to bounce back, should help the indices to flatten and even perhaps reverse some of the declines we've seen historically. That brings me to the end of my presentation. As mentioned, you can download the report as well as the technical methodology from JLL's website, as well as that of the DLDs. Thank you very much for your time. If there are any questions, I'd be more than happy to take them. Hi. Just about, yes.
Hi, everyone. Just a quick question from your research and your studies, and as you do this for a long time. In UAE, it seems that the situation now is stable when it comes to COVID and what's happening around the world because of the measures that we have here in the Emirates. But as we see now in Europe, especially in Central Europe or around Germany, that the COVID situation is going on high rates at the moment. Do you think that this will affect UAE in the coming months, or taking in mind that Emirates is actually taking good measures, especially when people entering to the Emirates?
Sure. So the thing to remember is actually, as Mahmoud talked about the nationalities of the buyers in this market, and GCC investors are some of the largest property buyers in the market. And we've seen high levels of vaccination rates. We're starting to see a return to Dubai. And generally speaking, what we're seeing is an improvement in transaction volumes. All that combined with the fact that macroeconomic fundamentals are improving, and in terms of retail spending, in terms of retail sales, specifically for the retail sector, and a return to business activity, implies that actually buyers will continue returning to the market, as we're already starting to see.
Good morning. My question is that you're saying that there's a decline in two of the areas. Any attributable reason, or you also said there is an upward trend on that happening?
I'm sorry, I didn't quite catch that.
So you mentioned that the retail prices transactions are going down, and there is a possible upward trend.
Yes.
Any attributable reasons that you see, how you correlate the upward trend? Is it because of the actions taken by the local government or some macroeconomic reasons happening in other locations? For example, the US has announced a huge stimulus package on infrastructure yesterday, and the president has signed the bill. Will that have any impact on the prices here? Like that, the correlation between these two factors?
Yeah, I think it's a combination of the two. I think government regulations are starting to improve business activity. And then in terms of your question about values coming down, volumes are starting to improve, and historically there's been a bit of a lag between volumes and values. And now that we're starting to see an improvement in volumes, that is an early indicator of values following suit, or at least stabilizing over the next 12 to 24 months. And I think, as I mentioned, the economic conditions are improving, and these fundamentals should help to provide a floor under prices at the very least over the next 12 months.
Hi, Khawar. Thank you for this presentation and the numbers that you've shown. My name is Bassem. I had a couple of questions, please. The first one, What sort of effect on the supply, the supply that's coming, have you factored that into any of your indices? And then two, how often do you review your indices, and do they incorporate things like industrial assets, or are you just basically looking at mainly retail as well as commercial? Thank you.
Sure. So first of all, it's important to highlight that this index is backward-looking. And in terms of your question about industrial, the commercial property price index incorporates all commercial property sectors. So it'll be inclusive of office, retail, industrial, hotels, effectively everything with the exception of the residential sector. And in terms of supply, in terms of forward-looking views, yes, we have incorporated that into what we think will happen over the next 12 to 24 months. When it comes to the Dubai office sector, our latest Q3 report shows that there's no supply due to be delivered in Q4. And actually, supply over the next couple of years is more or less in line with historic trends. Admittedly, we have seen some increase in the level of vacancy rates over the last year or two. But in line with increasing business activity, we anticipate that demand will mop up some of that extra vacancy that's in the market currently, and thus we should then see that being reflected in the index, where we'll see it stabilize for office and retail.
Hello, thank you for the session. My name is Oud Al-Khayyat. I'm from Reira, Bahrain. I have two questions. What are the challenges you are facing in data provision? I'm Chief of Real Estate Data and Information Studies. So I just need to know the challenges you're faced in data provision and how you guys ensure the consistency and the reliability of the data used in this number. Thank you.
So actually, we're quite lucky in Dubai. The market's been maturing in recent decades, and the government, of course, has been moving towards increasing the transparency. So we are seeing increasing sharing of data. And that's very true on this occasion. For example, the data comes from the DLD itself. So any transactions going through in the commercial property sector, they've shared with us over the last decade. And that's what we've created our model. That's effectively the data we fed into the model in order to create the indices.
Okay, and what's the mechanism of data sharing, if you don't mind me asking? Is it an online web portal? Is it a live sharing, or it's upon request?
The DLD shares this data with us on a quarterly basis, which we then process.
Okay. Perfect, thank you.
You're welcome.
Hi, thank you for the presentation. My name is Navroz and I'm from Bank International Properties. I have two questions. What are the macro and new trends we have seen in commercial real estate for the last 1 year? So if you would like to highlight any new or macro trends in commercial real estate. And the second question is there a specific commercial area which has seen drastic improvement in the last 1 year? Thank you.
Sure. So our commercial property price index incorporates all of the different sectors, and whilst we are seeing a downward trajectory for prices for office and retail, the fact that the overall commercial property price index is starting to flatten suggests that some of the other sectors which are included in our commercial property price index are starting to do better. And as I'm sure you've read, one of the sectors which is performing especially well is the logistics sector. We've seen an increased move, especially during the lockdown, towards online shopping, for example, and that has helped to provide a boost to the e-commerce sector, warehousing, industrial, as well as healthcare. But generally speaking, we've only really stripped out the office and the retail components as part of these indices, and that's what we've been focusing on.
Hello, Mr. Khawar. That was some really detailed insights. I have to congratulate you and your team involved in that.
Thank you.
One very important question that is, circumventing in every real estate professional's mind during this period is, we all are aware that Expo is going to definitely give a boost to this sector and this region. But what are the few factors, according to you, because you've done a lot of research, that will keep this momentum going post the Expo? which is going to determine the actual outcome of all the efforts put in over the last few years by this region?
Sure. So the government has introduced various measures. First of all, we've seen, for example, the government allowing 100% ownership by foreigners of onshore companies. We've seen reform of visas and citizenship laws. And that combined with the fact that macroeconomic situation is improving. For example, in the retail sector, historically, there's been quite a close relationship between consumer spending and retail sales and retail price index. And similarly, there's been quite a close relationship between the office price index and the performance of the financial and business services sector. Now, if we look at the change in government legislation combined with forecasts from, for example, Oxford Economics, we can see that those specific sectors that I mentioned, financial and business services, consumer spending, retail sales, all of that is expected to bounce back. And we're starting to already see some of that in terms of investor volumes or transaction volumes, where they're starting to come back, albeit from a low base. But as I say, the macroeconomic picture is improving, and that should translate into improving occupier demand, and that should help to hopefully bring investors back when it comes to the commercial property sector. And I think we're already starting to see, as I mentioned, that with some of the commercial property sectors, and we think we will hopefully see that with the office and retail sector over the next 12 to 24 months.
Thank you. Thank you so much.
Thank you very much.